Welcome to the HIA Essentials podcast, brought to you by Holt Insurance Agency. I'm your host, Keith Holt, and today we have a very special guest, Dan Smith from Element Home Loans. In this episode, we're diving deep in the home buying process, discussing various loan options and addressing the barriers to entry for first-time home buyers. Dan brings a wealth of knowledge and experience in the mortgage industry, and I'm excited to share his insights with you. Whether you're a first-time buyer or looking to upgrade from your current home, this episode is packed with valuable information that can help you make informed decisions. So, let's get started.
Welcome to HIA Essentials, your guide to smart purchases and long-lasting value, brought to you by Holt Insurance.
But first off, I'll just ask you, do you currently own a home?
I don't.
Okay, so you're rent?
Yeah.
What part of town are you in?
Franklin.
Okay, so Franklin proper? Or
Yeah, well, outside of Franklin. Actually, Franklin proper. Yeah.
Cool.
Yeah.
Cool. And you're renting a apartment?
ADU. So there's a separate house, ADU. I've got the ADU.
Cool.
Additional dwelling unit. For those of you that don't know.
Yeah. Okay, cool.
The home purchase is coming soon, but you gotta be ready for it because it's not free to buy a house.
Yeah, it's not. And that's part of why we're doing this,
And after you buy the house, it's not free either because you got to furnish it. You got to potentially get a mower.
Yeah.
Something's going to break.
It's like, depending on the size of your house, no matter when something goes wrong, there's a certain amount of zeros behind. Mm-hmm. The place may be $100 a year.
Yeah, there's two zeros.
Smaller home, it's $1,000.
Yeah.
You get $1 million home, it's something goes wrong, it's going to be $10K.
Yeah.
It's going to be at least $10K.
Yep.
So we're not at that $10K point yet, thankfully.
Thank God.
Tough pill to swallow.
Yeah.
Well, cool. So you, do you have any scheduled items in your life? You're a single guy. You probably don't have very many valuable things that you own. Is there anything that you do have?
What, that are monthly payments or that are assets?
Sorry, scheduled. There's the insurance terms.
Yeah.
Like things on your insurance policy that are separate from you just have a renter's policy, but you could still have like a
car.
Yeah, you have.
I've got auto insurance.
I'm saying if you had a watch your dad gave you.
Nope, none of that. None of that. I'm a very frugal and I don't need nice things type of guy. Yeah.
That's a good life to live, man.
It's a cheap way to. It's an affordable way to live, which allows you to go buy a house earlier than some might be able to. For sure. Yeah, and that's the goal.
Yeah. Who's gonna do your loan?
Probably somebody in my office if it's legal. I'm not sure if
Can you do your own?
I certainly cannot do my own. Okay. No, it's. I'm not even sure anyone in my branch could do it. I think we'd use my company, but have to go through a different branch or just give it to another loan officer I like here in the area.
Gotcha.
Yeah.
Okay. Cool.
Make sure they give me the absolute cheapest rate.
Yeah. Client for mortgage.
Oh, I'd be so easy, which is why I'd expect the cheapest rate. But
just like if I was getting insurance in Florida.
Yeah.
That'd probably be the worst client.
Well, you know what you want. Look, the reason that you pay for more is to get expertise you don't have.
Yeah.
So if you don't know anything about the industry, it's going to be a mistake to get the cheapest. But if you know the industry, you might as well just go find the cheapest because you already know what you're looking for, and you already know how to do it.
But honestly, I'd probably go direct because I'm I don't need this. I need this. I don't need that.
Yeah.
Well, cool. Well, so yeah. So you're from East Tennessee, right?
Mm-hmm. Knoxville.
Yeah. So what was life like growing up?
It was. That's a loaded question. As far as what?
I don't know.
Just life in general?
You were one of many in your family, right?
Yeah, I was one of 7. It was always a lot of activities. We owned 12 acres of land, had a barn, had a soccer field on it, had a pond with a zip line over it that we'd drop into the pond from 10, 15 feet above the water. So it was pretty much just constant sports, church, family, and of course, school.
Smaller town?
It's, we're right outside Knoxville. It's Maryville,
okay,
which is a pretty sought-after city to live in.
Yeah.
Right? It's not a huge city. It's definitely nothing like Nashville, right? There's no, I don't know. When I think of, large cities, I always feel like people really want the nightlife and the busyness, and there's none of that. It's just hey, we it's simple life, right? We did church, we did a lot of sports, and we did school, and it had everything to go do that, right?
Yeah.
And a plethora of people to know doing that, but it wasn't a big city by any means.
Right.
Yeah.
What sports?
Well, so soccer was like the sport
Right.
that I played a ton. I was very good at. But I mean, I'd play anything: ultimate frisbee, volleyball.
Yeah.
I don't know, you name it. Yeah.
So I see my son now, he's 7. My daughter, we'll get into some. My son, like, he's just like, he came down the other day he woke up, got dressed, and had just a baseball glove on. Like, not like a mitt, but like a batting glove.
Yeah.
And I was like, what was the deal? And he's like, I'm not going to wear it today. And so, it's funny.
That's awesome.
Yeah. So, okay. So sports, and then are you still involved in church and anything?
Yeah. I go to a church here, Stonebridge.
Okay.
Yeah.
Cool. Is that
That's like in Brentwood.
Is it like a non-denominational, or is it?
I don't really know. I bet they are, but fairly reformed, I'd say.
Yeah.
Yeah.
I mean, it doesn't matter.
No.
Yeah.
No, not
like,
really.
Yeah.
I really don't pay attention to that. There's a lot of drama around that, but I don't think it matters as much as people say it does.
Yeah. I think it's the service and the time and the consideration that's the most important.
Yeah, the people that are there, and generally just the alignment with how you live your life, and what you believe about the Bible. I mean, it doesn't really matter what denomination it is if they have beliefs that you just don't agree with completely, right? Like, there's a stretch where that's not a rabbit hole we want to go down.
not that kind of thing. Yeah, for sure. So then
I'm not here to give you guys any advice on going to church.
Yeah, right. And neither do I want to go there, so no worries. So you went to UT Knoxville?
Yeah.
Okay.
Finance. Yep.
Finance. What made you choose finance?
Honestly, it was I wanted a job that I wanted to study something that was fairly, I don't want to say niche, but just that there was job opportunities that were fairly specific to it. I knew I didn't want to be an accountant, so accounting was out. I knew I was going to do business, right? So inside of business, what are you going to do? Business management is not a degree I want. It's way too general. The marketing degree at UT, not high quality. There's logistics is great, but I was just like, hey, finance, it's interesting. I'm a numbers guy. I'm a nerd. And I thought it would give me a fairly specific job, which I'm a loan officer, but to be honest, you don't need a degree to be a loan officer, which is wild.
Right.
And if you're going down that finance track, it turns out it's really not that specific. So,
So then you got finance, and then the day you graduated, you started to be a loan officer, right?
Yeah, pretty much. Yeah, give it a month or two. Yeah, I was testing the waters with some other firms, but then it kind of fell into my lap.
What else was in the goings for a career path? Anything else?
Yeah, I mean, so financial planner was a thought, and I'm very glad I didn't go down that one. I just, at this point in my life, I don't believe people my age should be financial. That just doesn't make sense.
Yeah.
And then, of course, you can go be a financial analyst or an analyst, period, which is like slang for you are at the very bottom of the totem pole of any company you go work for.
Yeah.
Yeah.
I started watching Wolf of Wall Street the other night, which, man, that movie, you watch the first like half hour of that movie and you're like, yeah, man, I'm going to go conquer the world.
Yeah.
Do a lot of drugs, but conquer the world.
Yeah.
And his like first job, like sitting and like calling people for the stock market. Like that's the exact thought I think of when like people it's like starting out and as a financial analyst or something like that.
And if you're an analyst, you're going to do all of the heavy lifting without any of the, I mean, you're just going to go crunch numbers.
Right.
I mean, depending on where you go, but you're just going to do meaningless stuff until you can work up into something more significant, which and you're probably working in a stuffy office too, which I was not excited to go do. So.
Right. Yeah. And so you went to is it Element? Is that where
Element Home Loans.
Is that where you started off right there, right?
Yep.
And how do you like that?
I mean, it's a great work environment. My mentor, because he's really not my boss. Pretty much when I was speaking with him, I guess you could call it an interview, but he was pretty much like, hey, you can come work for me, but I'm not going to baby you. I'm not going to tell you what to do. But if you work hard, I'll help you out and show you what to do. And so, again, like there was no like, you need to go do these activities. It was like, hey, here's some activities I did, and they'd probably work for you if you did them. And then it was just me going out and trying it and seeing what works and what doesn't work and trying to scale.
Yeah. And so how long you been doing it?
2 years.
2 years. How's it you feel like it's the right path?
I don't know that I'd say it's definitely not the wrong path. I think
Right.
it's been great. I think I've done a lot of phenomenal things. You know, the cool thing about being in a space like this is that you're helping people. But in order to help people, you have to find a way to find them. A lot of times that's building a brand, that's building a reputation. And so I've built some really strong communities of people around me. And I really enjoy that aspect of it. But the reality of the mortgage business is that it's a feast or famine business. And I think that there are more stable businesses that also pay just as well, if not better. And so, you know, my like 5-year plan, maybe 10-year, I always say I'm not going to be in the loan business in 10 years. And the reason is I plan on making good money, stacking and saving that money because I don't have any expensive things like nice watches or a nice car. And then using that money to either go invest in real estate for myself, or it would be to start a company of some sorts. I'm really liking the blue collar space right now, like plumbing, electrician. Like there's great money in those, and you don't need to know how to do it. You need to find a great operator, give them the startup cost. So that's kind of where I think I'll end up in the next couple of years. This business, it's also highly saturated and highly competitive. There's a great book, and you know we're gonna go for 2 hours at this rate, but. It's called Blue Ocean Strategies, and I'm confident that this quote came out of this book, but I have read a lot of books, so I'm not 100%. But it kind of talks about, like, if it's easy to envision success, you're going to find that there's a lot of competition wherever that vision took you. So if you say, like, hey, like, these guys I know made $500,000 as a loan officer, and you know several of them, and there's a path that's fairly straightforward, go do X, Y, and Z, you're going to find a lot of competition because it doesn't take that much guts. And it doesn't take that much imagination. But if you can find an industry where there's less people that have gone before you, there's a little bit more ambiguity, so you have to take a little bit more risk. There's a lot more money to be made, and I am finding that out to be very true.
Yeah, for sure. I think that's something that you know we've dealt with as well in terms of like the independent insurance agency model. Like the business model is pretty simple. You have carriers that you write with, and you get people to buy insurance from you, and you take commission from that. And there's frameworks to building out a book of business, and we've roughly followed those for especially the last 20 years. But looking forward, you have to kind of find that uncharted territory where it still can bring in revenue, but it's a longer term game, and finding a place where you can be where no one else currently is. But it's still being a beneficial space. So I think that's awesome, man. I think that's are you into the like hustle culture stuff? Like,
I mean, it's overrated.
Yeah.
It's really overrated. Like, I think it's great to work. I mean, I think it's in protest to like something like quiet quitting. Have you heard of it? Right. So you know what that is. There's also people that are working. I forget the one. There's a channel on Reddit for it, but it's like people who work like 3 full-time jobs, but they're not actually like really performing. They're just not getting caught yet. I mean, I see the value, but the issue is like there are people that really are like, screw everyone except for my family, which I just think is a poor. There's some logic there, but they really just like burn bridges left and right. I don't think that's a fulfilling way to live. There's people that work just all the time, and then they're 50, they're worth a few million, but they don't have any meaningful relationships in their life, and I think that's crucial to having a successful life.
They're extremely unhealthy because they've been just purely surviving for the past 30 years. Yeah.
Well, I mean, honestly, hustle culture started to really morph into a lot of fitness stuff. Actually, wake up at 4 a.m., go work out. So there's a lot of healthy people, but I just think they're gonna have empty lives once they get older. And I hang out with a lot of people above my age, so I see that perspective of, you're in your like 40s, right? And you've just worked your entire life away. And then, you don't know when you're going to get a health issue. And then it's like, I'm 40 now. I've done very little in my life to really enjoy and experience my money or my success or my family or my kids. And then suddenly you're 40 and you can't do anything. You have money. Congratulations. So I'm not a big fan of it. I think I think there's a time to go balls to the wall, and I do think it's around my age, and I think you should do it for a little while, but also like check off some important life things that
It's
you need
also
to
a
hit.
time in your life where there's certain things you can do right now that you're not going to be able to do in 10 years, you know?
I'm single. I could pack up my car right now and go take a 30-day trip out west. I've done it once before. I'll do it again.
Yeah. So that's awesome, man. Okay. Well, I guess we'll get into the boring stuff. Actually, let's not do that yet.
Okay.
You mentioned books.
Uh-huh.
Give it to me. What you got?
Oh, I got to pull out the list.
All right.
I have
you're a nonfiction guy?
Yeah, I don't read any fiction.
Okay. You'll get there.
I won't get there. I mean, I like watching movies. If I'm going to do fiction, I'm going to watch a movie.
You're going to let it happen to you.
Yeah, I'm going to watch a movie. But if I'm going to spend the time to either read or listen to an audio, it's going to be something that I feel like is actually going to help my mindset. I mean, here's a list.
Mm-hmm.
Yeah, like I mean I guess that's the list. So there you go. I don't know how many books that is. Probably 30 books that I've read.
We'll have a Dan's recommended book.
Oh, dude. I mean, great one for people that think they understand economics, and it's really simple. Is How an Economy Grows and Why It Crashes. I love that one. It just kind of talks about. Well, it's not going to make you feel good about the U.S. dollar, but I also think it's the real world that we live in. Especially when people are talking about interest rates and where all that's going. It's not going to tackle that, but it's just the U.S. isn't as good of a position as we think we are, because our monetary system has only been around for 60, 70 years. I mean, it's not like everybody looks back and we talk about the stock market increasing this much every year. We talk about houses increasing. But there are other strong economies that have gone through brutal times that weren't just like because the mortgage space has been brutal for the last 2 years, and I'm assuming insurance has as well for the last 2 years. And everybody's like, oh, it's just it's going to correct, and I think it will, but it's like nothing's guaranteed in our world. I feel like Americans do feel like everything's guaranteed that it'll correct. 10x is easier than 2x is a phenomenal book. Let's see.
Is that Grant Cardone?
That is not.
Okay.
Thank goodness.
Because he's the 10X guy.
This is actually way better than his.
Okay.
And the whole idea behind this book is find out, what your 20/80 is. What's the 20% activity that's giving you 80% of your results in your business, and then make that much more than just 20%. Like it talks about this company that was offering logistics solutions to a wide array of customers, and most of their customers were low paying, but they had some that were just paying really well. Payments were always coming on time. Everything was easier and higher profit margin. So they pretty much cut out all of their low paying clients over time and just focused on the very wealthy, and then they blew up their company. So the whole idea of the book is, what can you do to not necessarily increase the amount of time you're working, but in become more efficient and make more money. Mm-hmm. Phenomenal book. I'll do one more.
Yeah.
Let's see. Oh man, I don't think it's Dan Sullivan. I think it might be Dan Sullivan. He's an FBI negotiator. Never Split the Difference.
The Voss.
Voss.
Yeah.
What's his first name?
Peter Voss?
No, it's not Peter. Okay. Never Split the Difference, though, is one of the best books I've read.
Yeah.
I mean, if I could just implement 10% of what was in that book, I'd be so much further along in my career.
Yeah. That's awesome, man. I mean, so just a little bit about my thing, because this show's about you. So I just halfway through college, it was the beginning of podcasts. And I found this one productivity podcast, and it was life-changing to me. It's called Back to Work. And so that was in 2012. And listen to that, and that kind of opened my eye to getting things done and kind of the productivity world. And then you had the Predictably Irrational, the more business driven books and finance books, mm-hmm. and those kind of things. And then
did you find your way into fiction at some point?
So a little bit here and there, but then fast forward to April of this year, and I came to a point where I was like, I can't I can't bring any more of this into my head. Like it was having a negative effect upon me, where it's like I'm taking it in and I'm not able to focus on what's actually going to give me results. Yeah. And I think it's a personal thing for me. It's always looking for the perfect answer, looking for the easiest solution to get from A to B. And so I deleted all the podcasts on my podcast feed. I got rid of most of my nonfiction books, got rid of all the Audible books, downloaded a couple of whatever fiction books and started reading a fiction book. And so it was April 1st of this year. And then the whole month I didn't listen to any podcasts, which is was a big thing for me. And come back May 1st, started since then I've been in a lot better place, doing mostly fiction, some like biographies and stuff. But just a couple weeks ago, I went and I was like, I wonder what's going on with the Back to Work podcast. And I listened to it for 12 years, and opened it up, and their last episode was April 3rd of that year. It's like I told my wife, and she was like, yeah, because you were the only one listening to this stupid show. Yeah. And I was like, yeah, you're probably right. But it was it felt like a weird coincidence that happened. So I've been through a whole journey with it, and I have a difficult relationship with self-help, like the industry. Again, we're getting into this is us towing that religion line again, but but it's just the racket of making someone spend money and spend their time to hear about what a supposed answer is, instead of just going and doing it. So I think it's obviously transformational for some people, but it was definitely a negative thing for me.
Yeah, I mean, I think that's just life. Some people are going to take it and run and be successful, and I think on the flip side, you have people that like to be intelligent, so they like to have answers to things, and so they're going to do a lot of self-help stuff, but they're not actually going to do the work, right? And that's an issue. They sound really smart, but they might not actually be doing the work. Then you have some people where it's just constantly sitting in the back of their brain, and they're like, if they retain any of the book, they're like, oh man, I should be doing this, but I'm not doing it, and then they might spiral in that direction. But I mean, I also think that if you've got enough expertise and experience, those books can be transformational. Like, for instance, Traction, a very a successful entrepreneur here in Nashville. It changed his business because he changed how he set his I think that book talks a lot about your 90-day rock, I believe. And how you can set these goals, and how you need to keep every single person on your team, including yourself, accountable to all of each other. Right. And so that completely transformed his business. He started crushing it after he started implementing. I completely
agree with, and I think that's totally extremely accurate. Yeah. My issue was that you've got Traction, you've got Russell Brunson, you've got E-Myth, all of these books that on their own are great. And my issue was, okay, well, let me follow E-Myth. And like I said earlier,
they're just men.
When it gets to being difficult, it's like, well, maybe Traction will have the answer. Yep. Let me go, and I think that's the issue. I think it's the same thing with a lot of self-help, where it's like, if you can find the piece that's transformational for you, the hardest part is to not try to find another answer to the same problem.
Yeah, sometimes you just have to go through the suck.
Yeah, no, you have to. Yeah. That's the only way. Yeah. So, okay. Well, now let's talk about mortgages, because those are interesting. Sure. So like I said, this is going to be part of the larger thing. So I'll kind of have some pointed questions that are kind of going to fit into that, but also beneficial for general things. Sure. So we kind of mentioned it in our phone call the other day, but when it comes to buying a home, what loan options do you have?
Yeah, so I mean, first time home buyer, FHA, by the way, does not stand for that. They struggle with the A, but it's always first, or I guess even the first time home buyer, it's not FHA, that's Federal Housing Administration. And you can get that any time. It's 3.5% down, and honestly, it's a loan that we're writing more than ever. It used to be kind of like conventional was the go-to, and FHA was a buy, just for the right fit. And right now, I mean, I think it's kind of an overall reflection of the U.S. There's a lot of people with a lot of debt. That's probably the number one reason we're going FHA if we have to. A lot of credit scores that don't make sense for conventional, but FHA allows you to, it's a little bit in the weeds, but go up to about a 56 back end debt to income ratio, which means that if you're really motivated to buy a home, you can buy, either more of a house or just afford what you want. Conventional, so that's 3.5% down if I didn't already say it. Phenomenal loan program. If you're a first-time home buyer, conventional, you can put 3% down, and then if you want to buy another home, let's say you're moving, you want to go buy the next one, you can put 5% down with the conventional loan, and then so those are really those capture I'd say it'd be probably fairly accurate to say they capture about 90% of primary residence homes or homes that you're going to live in, but you've also got USDA if you're in a rural area, and you can put 0% down with that. And then if you're VA, you can put 0% down through a VA loan as well. And honestly, I'm not a big fan of 0% down, but if you're gonna do it, VA is the best one to do it with. They have great rates, and it helps offset it. But the key with VA is that, or any zero down is because I actually have a client going 0% down right now, and I was just like, look, you have to understand that you do not want to move within the next 2 years. So you need to make sure that if you're going 0% down, you're going to actually stick in this house and let it appreciate, or else you're going to be writing a check to the title company or to the buyer when you're selling this home on the back end.
All right, real quick. Sorry, I wanted to interrupt Dan for just a second to talk to you about Holt Insurance Agency. We are a family-owned insurance agency here in Middle Tennessee, and we've been serving the state of Tennessee since 1946, and we're not going anywhere. We want to keep doing this. We want to keep taking care of our clients. And if you're buying a home, own vehicles, if your family needs their prized possessions insured, please give us a chance, see if we can help you. And if we can't help you, I promise we will let you know things to take back to your current agent so that you're taken care of. All right, back to Dan. Yeah, so do you know what qualifies as rural for USDA?
No, it's a map. You can literally look up USDA eligibility map, and honestly, it's actually it's very generous. I mean, it doesn't not most of Williamson and Davidson you couldn't. Yeah. But there are pockets, but then it's almost everywhere around it in Tennessee. Mm-hmm. You just need to avoid the dense cities, and besides that, you can go USDA. And
that's got to be your primary residence, though, right?
It does, and it also has income limitations.
Okay.
Really, I would say that any 0% down loan is going to have income limitations, and so
makes sense.
Yeah, it's usually depending on which county, it's a county by county thing, based on the average median income in those areas. It usually ranges between 80 and 100,000, and again, it's dependent on it just gets complicated.
That's why you hire someone like yourself, right?
Yeah.
What about fixed rate versus adjustable? I mean, I think that's what it is. It's
Sure.
Either your interest rate stays the same or it changes. Mm-hmm. But right now versus other times in the recent history, are adjustable rates, does it make sense to do adjustable rates? What's your opinion on that?
Yes and no. It makes more sense than ever to I guess I'd say I don't want to say in history. I'll say it's safer to go ARMs than it used to be. Since 2007 happened, they have completely overhauled the guidelines for what it takes to get an ARM loan, and you're going to be fully capable of making that payment even if rates jump up on you, because that's how we underwrite you. Mm-hmm. But the rates really aren't much better. Barely, to the point where I'm I would just go fixed. I'd go fixed. And I work with a lot of investors. Most investors are going fixed. And there's a lot of really smart people that do it. And again, some people just have a bad taste in their mouth from what happened. But again, it's just one more variable you have to work through.
Right.
If you can have it fixed, it kind of allows you to build a framework.
Yeah. Well, and you also know that, it's going to be this much. I mean, with taxes and insurance kind of and escrow kind of being different year to year, but
Sure.
it's going to be pretty close to this number for
hopefully a small change unless something crazy is going on.
Right. Yeah. So, so is there, when you write an ARM, is there a range when it comes to that?
Yeah. I mean, there's pretty much a floor and ceiling, right?
Okay.
And then on each, they define the period. So it's like it can only increase a maximum of this percent over this time frame. Usually on a yearly basis, it has the ability to change, and it'll only change 1% that year. And then it's like if, let's say, the market dictated that interest rates were going way up, it's going to say it can only change this percent every, let's say, year, but it can't pass this maximum interest rate. Mm-hmm. So again, like if you just go fixed, you're still going to get the benefit of a low interest rate if things rise, but ARM at least has hey, look, we can't go above this. Mm-hmm.
And who decides that rate every year? Does it just get reassessed on like the date, like the date it was written every year, or do all ARMs go up a certain?
It's just
amount?
They could potentially drop. I mean, like it's all about what mortgage rate interest is at that time, and then once that period flips, it's gonna again, like if rates were only half a point higher, even though it could go a max of 1, it's only going to go half a point. It's half a point. It's just going to match what the market's doing, but it has guidelines for how much it can actually change. Mm-hmm.
Yeah, gotcha. I mean, the world I know is insurance, where your rate is dependent on a whole lot of factors, and it could go down. Yeah,
it's unlikely.
It has gone down in the past, but it may go down in the future. But yeah, I think that's just where my head goes. Is like what's dictating that change every year. And I know it's the market; it makes sense. But just was wondering. So when it comes to, obviously, you have pretty stringent limitations when it comes to VA and USDA loans. It's pretty, especially with VA, is a clear guideline. It's VA specific. But when it comes to doing a FHA, it's just thinking about first-time home buyer. Like, what do you need to buy a house?
Yeah, I mean, so I think the first thing that I'd like to tackle, because there's so much confusion on it, is how much money do you really need to close on a home? Because you might have a 3.5% down payment. Let's go conventional and make it a little bit easier. It's a 3% down payment on a $300,000 home. That's $9,000. So some people might say, cool, $9,000. I need $9,000 to close. But the reality is that there's usually going to be around, $7,000-8,000 in closing costs with title, and a whole slew of things. You're going to pay for appraisal. You're going to pay for a credit report. You're going to pay for title insurance, all these different things that cost money. And so, 3% down, you might end up paying $9,000 for down payment. Let's say it's $8,000. So that's $17,000 that you have to spend to buy a $300,000 home. Now, like, there's caveats to it, which is like, this is kind of the beauty of working with a good realtor and loan officer team. If they can, build a strategy and stick to it. I've got clients right now that they're looking to buy a $309,000 home, 0% down, and they're going to get $9,000 in closing costs, which covers closing costs completely. So they will actually come to, I mean, again, is this my preferred method of buying a home for anybody? Yeah. No, it's just not. It's a higher risk thing to do, but they're doing it. And they're going to pay literally nothing to close on that home. And so, like, that can be something that you're not tied to paying those closing costs. You can negotiate. Buying a home's completely, you can negotiate as much as you want, and if they're not going to give it, go find the next house. Mm-hmm. It might mean you don't buy the house of your dreams, but if it's your first house, that's fine. You buy it, you get a little bit of appreciation over 5 years, sell it, use that money to go have enough for down payment and closing costs on the house that you want. Now, what else do you need to go be a first-time home buyer? You need to have a job for at least the last 2 years. You can go really deep into that. I just say if you're W-2, that's all day. That's easy. If you're a business owner, you need to have a strong 2-year history. And if you're truly, if you're cooking your own books, if you're accounting, you got to make sure that, all these business owners think that it's the greatest thing to write off everything as business expenses, but we will deduct that out of the amount of money that you make. So there are people who genuinely make $500,000. And then they go spend, through business expenses, whether they needed them or not, go buy some new trucks or something. And suddenly, they've racked up expenses of $450,000. Now we got $50,000 of income to work with. And there are ways to offset it, depreciation and stuff like that, which are great methods to do it. But as a business owner, you just need to make sure you're actually profiting enough, because we're not just going to say, hey, look, we know you made that money, but you have these expenses. Mm-hmm. We're going to say you have expenses and we can't use it. So yeah, 2-year work history is pretty straightforward, but and it's not to say, I feel like there's this big stigma out there of like, if you're a business owner, it's going to be really hard to go buy a home. It's not harder. We're just going to do a more thorough investigation, because now you've got tax returns, your 1040. We're going to be looking at all the different line items, and there's just more questions, right? Like if you're W-2, you've already paid your taxes. Mm. If you're a business owner, we got to make sure you've paid your taxes. If you haven't paid your taxes, now we got to figure that out. It's just There's more moving pieces with it. So we've got, a 2-year work history, credit. We'd like credit. I like credit to be over 640. You can go down to like 600, but it'd be for rate's sake, for getting a decent rate. FHA provides very competitive rates starting at about a 640 FICO. So let's get to 640, and then just get me the documentation that I need. I mean, it's honestly fairly straightforward. It's just every deal has the opportunity, just like in your business. Like a home policy is probably fairly straightforward until it's not. Mm. And that's just, we got to go get things figured out. And for clients, the biggest thing you can help yourself or do to help us and yourself, because it will make the job easier, is just provide the paperwork on a timely manner.
Yeah.
And it will make your life so much easier.
Look like?
So I mean, like, the most basic, right? I'm going to need W-2s. Your last 2 years of W-2s. I'm going to need your last 2 months of pay stubs. And then, like, this is where people get thrown off. Okay, so if you get commission or bonus and you want to use that to help increase your income for each year, now I need the end of year pay stubs for the last 2 years to show what you made in each year, because the W-2 doesn't show an itemized breakdown of how you're paid. It just says this is what they're paid. And you're going to need 30 days of bank statements, license, stuff like that. And again, it can get as complicated as the borrower is complicated. I had a business owner that was a partner in 21 different companies. Oh, and so we needed the business tax return, not the true business tax return, the K-1s from each one of those S-corps that he was a part of. And it was brutal for both of us.
Yeah, yeah.
Neither one of us enjoyed that transaction.
Yeah, I bet.
We're friends, though.
So is that's all in the pre-approval process, right?
Yep.
In order to figure out how much you can afford,
absolutely,
you have to kind of provide all that stuff.
And what's crazy too is, people are always curious how long it takes to get pre-approved. I'm always like, it takes as long as it takes me to get your paperwork. Like I've had some really some people that had a Google Drop folder that had every bit of documentation I needed. And I mean, it could take an hour. I mean, it could take less than that, honestly.
Yeah. So a couple of things with the process. So pre-approval process, they go out, they go look to find a home, they give you the documents they need, they go to find a home. They only look at homes they can afford, which is the most important thing you can say when you're looking to buy a house, is you don't look at houses you can't afford.
Yeah, it's dangerous.
It's very dangerous. So when they go through that process, they find a house. What do you do if their appraisal comes back lower than what they're paying?
That's actually a great question for a realtor, but I can handle it too, because it needs some sort of negotiation needs to happen. Like if it's a $20,000 spread, it's like, okay, how do we either the buyer's going to come to the table with an extra $20,000 to cover that the appraisal gap, or it needs to be negotiated that, hey, look, this deal is no longer a good deal for my client unless you guys can cover that $20,000 spread. And that happens all the time. Now, having said that happens all the time, which is the seller covers it. It doesn't happen every time, but also in this market, it's virtually not happening. It does happen occasionally, but usually it's because a lot of times those deals just fall apart.
Right.
Because a lot of times it means that the listing, for instance, great example, Airbnb. This realtor wanted to value it like it was a business with a cap rate, and valued the house off the cap rate. And then the house came in like $100,000 over what the market is actually valuing that house at.
Yeah.
That deal just died. There's nothing you can do about that.
Yeah.
The seller wasn't going to come down, but they also, it's residential real estate. It's called that for a reason.
Right.
Yeah, you can run an Airbnb and make a lot of money off of it, but it's going to use. We're not using appraisals like that.
Right.
Yeah.
Right. Yeah. Cool. Well. Okay. So then, let's say the appraisal comes back perfect and everything is going great. What's the closing process look like?
I'll take us maybe a step back. So from start to finish, right? You're starting. You fill out a loan application. Then I am going to contact you and say, this is the documents I need to get you pre-approved. You're going to send those in. Then once you're pre-approved, you find a house, you put in an offer. Then we're going to start the official underwriting process. And so we're going to send you over to underwriting. Our underwriters are going to take a look. Normally they've got a question about something because they do a very thorough deep dive and they've got a lot of questions. It doesn't always happen, but they usually have something they want to pick out. And normally a lot of just letters of explanation. Hey, this is why I did X, Y, and Z, and poof, done, good. And so, during that time is also when you're going to do appraisal, you're going to do an inspection. You just got to be careful with those inspections that you don't, find a good inspector who's not going to freak you out because they will pick out any and everything. And then you're going to get cleared to close. So once you're cleared to close, all the numbers are finalized, your rate's locked, you know exactly what your mortgage payment's going to be, and you know how much cash you're going to take to closing. So once you're clear to close, the next thing to do really is just to go to the title company to close the deal. And before that, you got to wire your funds to the title company. And something we always tell our clients is get on the line. It's not profound. It can just save you $100,000 though. Get on the line with your title company and confirm routing numbers and account numbers and all that, because it has happened in the past. Because it's such a large transfer of money, there are scammers who will try to intercept communication from title companies and then put their own digits in there, effectively just trying to copy it. And it didn't happen in our branch, but somebody else out in our very large company had it happen where one of their clients literally lost out on over six figures because they didn't confirm it with the title company.
Yeah, when we bought our second house, we had cash out, and I messed up our account number. I left a digit out. So it didn't go anywhere. They just it didn't show up in our account for like a few days, and we call and we're like, hey,
it's a little stressful.
Yeah, but we got it figured out. So it was safe. It was like one of those where it's like the like 5 zeros and I did like 4 zeros.
Yep.
Whatever. So it was all good. And then you got your house, right? And then you never talk to you again.
Yeah, I might call you. People overcomplicate, like customers themselves overcomplicate the whole process. It's pretty simple. Really, you shouldn't have to do much work. You're just going to have to do the not fun side of it, which is go dig up documents that you forgot the account and password to get into, maybe your HR software.
Right.
But besides that, you really shouldn't have to do a whole lot. And just be as relaxed as possible.
Right.
It makes it easier for every single person around you.
Yeah. So what do you feel like, where do you see the mortgage industry going in the next 5-10 years? Any big changes you see on the horizon?
Maybe a lack of change. I don't see interest rates coming down as far as a lot of people are saying. And I think if you want just an example of why that also can be very true is because for the last 2 years, at every step of the way, they've said rates were going to come down. Even Fannie Mae, who is, one of the government-sponsored enterprises is the official term, but this monster conglomerate that buys up mortgage loans, they said rates were going to be at 4.35, 4.5, it really doesn't matter. by, I believe it was Q2 of 2023, and rates were like 7.5 at that time. I actually did a little research for a presentation I gave recently to a team of realtors. Almost across the board, the big research institutions / real estate companies are saying that rates will be around 6.5 by the end of the year. We'll see. I think that this industry, I don't see it change. I think we've already seen a ton of change over the last 2 years. I mean, the amount of people that left this industry was astronomical. I mean, I think it was like 40-50% of loan officers disappeared over the last 2 years. I think it will continue to stay that way because I don't see us rebounding very hard anytime soon. I don't know. If you ask some of my friends, they're going to say AI is going to take over this industry, and we'll see. Yeah,
I think
we'll see.
I
think it's too complicated to really have an opinion. I think, for me personally, I think it's too complicated for me to really have an opinion on whether or not it's actually going to work or not for our industry.
I agree. I think it's definitely too complicated. I also think that it's AI can be blown out of proportion as to what that means. It's as a tool, it can help you do really great things.
Yeah.
But again, just like religion and self-help, it's an area that we probably don't want to tread upon.
Yeah, I just think, I think the big factor is if massive adoption hits and people actually trusted it in AI as much as they trust humans, that's when we got to be worried. But there's no bet that's going to happen. That's all I think.
Yeah. And I think that there's enough, the scale's large enough for people to do that and find the mistakes, and then for the greater population to realize those mistakes. So,
ChatGPT makes mistakes all the time.
Yeah. So what's your free time look like these days outside of mortgages?
Well, you've been introduced to at least one of them, which is spending time over at the golf sanctuary.
Yeah.
So I spend a lot of time over there. I've got the golf itch really badly. Hence the way that I'm dressed up right now. I was playing last night. I was there 2 times yesterday. I was there from 2 to 4 and 9 to like 10:30, maybe even a little bit later. So golf is something I do a lot. I have got a really great group of friends that actually, fun enough, it is fun to make friends that started out as business acquaintances. Mm-hmm. I'd say it's a more challenging way to do it, but what I'll also say is that they couldn't benefit from me and I couldn't necessarily benefit from them. Like either way, like they ask me mortgage questions all the time, but I'm not their lender.
Right.
They're all investors or entrepreneurs doing their own thing. And so, we'll go, one of the things we'll do is we'll play golf. We'll play some volleyball occasionally. We'll just hang out.
Yeah.
That's mostly what my free time consists of. If not, I might just have a lazy day.
Yeah.
Occasionally, it's nice to have that when you work as much as we work.
Right.
Yeah.
Kick back, reading a nonfiction book.
Yeah. As a single guy with no kids, it's I have more free time than the rest, but I spend it a lot of times just with friends in the area.
Nice.
It's great.
Nice. Yeah. Well, cool. Well, I think there's for the first go around, I think this is great, man. How can people get a hold of you, and who should get a hold of you?
That's one of my favorite questions so far. Not the how to get a hold, but who needs to be speaking with me, and even on what timeline is what I was thinking. Right, like for instance, I can't give you any advice on how to do your taxes, but if you talk to me and you're like, hey, I want to buy a home next year, and I'm a business owner, there's at least a general idea of again, I'm not going to give you any advice you can take because it's not legal, but there's some hypotheticals that might work for you versus not work for you, such as, hey, maybe this year you only take depreciation against maybe your trucks, but you don't go out and buy new trucks. You don't go buy a ton of things you don't need just so you pay less in taxes. If you're looking to do a job change anytime soon, maybe you want to, and you're looking to buy a home, okay? Job changes can kind of throw a wrench in things depending on what it is, if you're switching industries, all that stuff. So it's like if you're intent on buying a home, you should speak with a lender before you make big life decisions. Again, it's all contingent on how bad you want the house, because if house is happening in the next 5 years, do whatever you want to do. I'm not a life coach, and I also don't think that buying a house is the most important thing in the world. I just think if you want to do it, it's great for you and your financial future. I single-handedly, most of the wealthy people I know got I'd say moderately wealthy, got that way over the last 5 years not from being like crazy entrepreneurs or business people, but just from owning real estate, literally just sitting there, maybe even just living in their house. I mean, 500,000 easy for several people here in Nashville, just living in their primary residence. So yeah, I'd just say, like, if you're looking to buy a house, but you've got questions, things might, your future looks like it's changing, right? The job market's a little iffy right now. Like, if you're switching things up and you want to buy a house, speak to a mortgage lender. And then how do you reach me? I'm most accessible by phone. If you call me, I'm the best with that. Sometimes texts can slip by me, but and my number is 865-274. That's a Knoxville phone number, by the way. I'll just preface that. 865-274-7875. Nice. And then you can give me a call and we can just have a fun conversation on what you're trying to do.
Yeah. No, I think that's awesome, man. And I totally agree. I think that everyone is looking for a certain kind of person to work with, but beyond that, like you're saying, like the part of the goal of this is that exact thing where we're not going to go out and tell you that go stop buying lattes and save 10K and you can buy a house. It's explaining the importance of experts that will benefit you in your life.
Now, I might tell you to get rid of your $1,100 car payment.
Yeah, right.
And I won't say it strongly. I'll just, hey, if you want life to be a little bit easier, that truck payment's not helping you, buddy.
Yeah. So I think that those like, so much of life is not just what someone can say in a 15-second video.
Yep.
It's so much more complicated, and our goal is to continue to educate people on that not being the solution, but actually the like experience and the knowledge you gain from talking to an expert, and how if you find the right expert, that can actually be extremely beneficial for your life. So
yeah, and I think people just need to be. I think one of the best things that you can be when you're gonna go talk to a mortgage lender is have an idea of what your next few years look like, because any strategies, we don't want to just get you a loan and then kick you out the door and then life gets hard and then you're stuck. That's actually why I don't like 0% loans, because again, life can happen. So in order for me wanting to take care of my clients, I'm like, that's a tough thing to do, but that can be really useful to know what your next few years look like. Because honestly, it might be the difference of you buying or me telling you it's just not the right time. Because if you're it just, all these different factors, if you have an idea of what you want out of life for the next few years, we can usually handle the rest of getting your situation figured out. Because there's almost always a solution. There's not always, but
right.
Almost always.
Well, awesome, man. This is great. I appreciate it.
Yeah.
Thanks so much. Yeah. All right, so there you go. Thank you for joining us on this episode 2 of HIA Essentials. I want to give a big thanks to Dan Smith from Element Home Loans for sharing his expertise. If you found this episode helpful, please make sure to subscribe, leave a review, share it with others, and for more resources on detailed guides on making smart financial purchasing decisions, visit our blog at holtinsuranceragency.com. And until next time, remember to make smart purchases and maintain your long-lasting value.